Good morning, traders. It is Wednesday, Veterans Day, the 11th of November 2015. It's 8:03 a.m. Chicago time. I apologize for the delay in starting. It takes a little bit for YouTube to start the stream, and since I have it set for 8 o'clock Central, I can't start it before then. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A fair amount of news overnight. First of all, the API petroleum inventories came out yesterday after the close, came in at plus 6.3 million barrels. Plus 6.3 million barrels. That's a huge surplus versus the 2.8 expected or 2.8 prior. This is the fifth straight build, largest build since October 20th. You can see it. When a number came out, you have a small reaction in crude. We do have we don't even have the crude oil inventories released today because of the holiday. Again, U.S. holiday today. It's Veterans Day. The bond market, banks, local, state, and federal governments are closed. Schools are closed. Expecting the trade to be light today. It's also a Canadian holiday. It's called Remembrance Day in Canada. Their bond market and banking system is closed as well. Overnight, China's October retail sales year on year came in at 11%, which was a 9-month high versus 10.9%. The industrial production number, however, came in a little less, a little lower year on year, 5.6% versus 5.8. That's a 7-month low. That's pressure on that economy there, on that market. The UK had its September ILO unemployment rate came in at 5.3%. Versus 5.4%, so slightly better. And then this morning at 7:15, about an hour ago, Draghi was scheduled to speak. Thought it was going to be a big deal. However, there were no remarks on monetary policy in Draghi's prepared remarks, so nothing really out of that. As far as what we've got for today, today really there's nothing on deck on the calendar. The only thing we have is a bunch of BOE speakers. In about 5 minutes, we have BOE speaker Shafiq discussing role of central banks in financial markets. At 9:45 Central, we have BOE speaker Kunlife. And then at 10 o'clock Central, we have ECB speaker Constancio and Lind. At 11 o'clock, we have BOE speaker Carney delivering closing remarks at the BOE Open Forum in London. That's really it for today as far as events. So we need to just kind of take this as a chill day and relax a little bit. Remember, tomorrow we have quite a few releases that are important. German CPI, European industrial production. We have initial claims tomorrow in the U.S., but also we have Fed's Bullard, Yellen, Lacker, Evans, Dudley, and Fisher. Again, Fed's Bullard, Yellen, Lacker, Evans, Dudley, and Fisher. It's like a procession. It's a parade of Fed speakers tomorrow. That's expected to add some volatility to the market. The market's very, very sensitive to what's going to happen in December. And then we finish off with Friday, German GDP, UK construction output, consumer output, and European GDP trade balance, US retail sales, PPI, business inventories in University of Michigan, and then we have Nowotny and Fedmester on Friday. So that's how the week is shaping up. Let's look at what you're here for, which is the technical end of things. So if you recall yesterday, and I covered this, hopefully most of you attended the Convergence Tuesday webinar event yesterday, did about an hour and 15 minutes or so, and talked about how I'm looking at order flow, how I'm reading order flow. I'm using a tool to do that. How I'm reading order flow and stalking trades. The feedback I got from it was outstanding, and I appreciate that. There was a huge number of people in attendance. We had about almost 800 people register for it. It was quite big, but overall, yesterday I covered in depth what went on. I replayed yesterday, and so I'm going to sound very much like I did on the webinar to review this, but it's mandatory that we review yesterday's action versus what was expected. Yesterday we opened in value. The key expectations for yesterday are very simple. The key expectation is a test of the point of control right in here at 74 and a quarter. The other key thing to remember about yesterday from the trader bite is that the 74.75 area was key support below. Hang on, I need to turn down my news feed. The 64.65 area was key support, and then the overall target from yesterday was the 80.50 on that MCV box. So that's basically what we got. Yesterday's hypo one was right on point. We pushed up. Let's switch charts to the trigger chart to see the details. We had an open auction in range. You can see the market here bouncing up and down, basically giving us an open auction. But we tested the 74 and a quarter, and then once the 75 was hit, we gunned it down into 64.50, just 2 ticks below that 65 level I talked about. If you don't recall where that 65 area, 64.65 area comes from, you can always go back to YouTube, search Futures Trader 71 space Trader Bite, one word, and look at yesterday's video. Just push the video all the way to the end, and you can see the explanation for that. I don't need to go over that here. This was a beautiful setup here, a 10-point drop right off of a key area, and then from another key area, you basically had a reversal setup situation back up to the mid. And then the market chopped around to build this point of control, and then we ultimately ended up pushing to 79. Recall that 79 is the FOMC high, and essentially yesterday we traded completely inside of the FOMC range, and the market was in a resting condition. The point of control from yesterday migrated slightly downwards, but it's inside of value. We have a balanced day, so these 2 days are accumulated together. And I want to show you real quick what the VPOC movement chart looks like. Again, this is a chart showing just a profile of what occurred on a daily basis. So there's a daily bar in here that's hidden. And then what we're tracking on this chart is the point of control movement, these bright pink lines, and also sutured together with this brown or maroon line to track where the point of control movement is. So you can see the point of control accepting these balanced looking profiles here, accepting lower and lower values until this day here. We have value in line. This is why I was looking to attack on hypo 1. I was looking to attack this 70 this 80-ish area on this day, and that hypo did not work at all. The next day we moved the point of control down, and then yesterday we moved the point of control slightly down, but you can see it's an inside day, so you can see these daily lines converging in, and we have what's an inside day with a mostly balanced trade. But the auction yesterday was incomplete. So what the market has done is that it has moved value lower. It has accepted value lower, and it is resting. It is basically pausing here. And right now we're trading this 2083. The market is in a reversal mode right now. So if we look at this more closely, you'll see that yesterday's auction was incomplete to the upside. Essentially what that means is the market didn't quite find its sellers. I mean, it finished up with a weak high. It had a high of 78.75, and then it put in a high of 79 before it closed. and that's basically the market running out of time. So as I said in yesterday's convergence event, the expectation is for this to drift upwards overnight, and it did. So we managed to drift all the way up to 87 and a quarter, and we'll look at that in a minute. We'll have to pull in the composite in the area. We've broken this trend line that we've held since the high in the overnight, but nothing really, I don't consider anything to be a real test when it happens in the overnight session. It needs to occur when the equities are open, when the 500 stocks are open, because we want to see what the S&P 500 stocks are doing with regards to these levels, rather than what the ES is doing in sympathy with Asia and the European markets. So this all stays intact until we open today. Since we're opening just above, chances are we will test this trend line from the top, but the expectation is for it to retest this week high again. Again, the markets like to, if the markets want to go higher, this is going to sound counterintuitive, but there's a very good reason for it. If the market wants to go higher, it generally tests lower first. Generally, it tests lower first to see if there's any selling interest and to motivate buying interest before it's free to move higher. It's almost like a check to make sure that there isn't an opposing force to moving higher that would cause it to hesitate on the way up. So in general, the expectation is for this to fall. The value area is valid yesterday. Note the retest of the OS high on the close, 78.75. Pullback. There was a ton of liquidity here. I show it in yesterday's video. If you really are struggling with order flow, reading the market, honing in on entries and so forth, I strongly encourage you to watch yesterday's video. Yesterday's video is going to be followed up with a part 2, which is a live session during the day. I had to do yesterday's after the market, and there was nothing to trade, so I had to go with a playback, a replay. But it's really, the principles are the same. They're applied in real time. The only thing that gets in the way is the emotional part. But there was a lot of liquidity here at 75 when we broke through. A ton of trades went off at that 75. About, if I recall, about 2,200 contracts pushed through, pulled back to the OS high, and pushed to 79, leaving us with, even though we have a taper, this high is not complete. The expectation is for the market to come back and retest it. Now let's zoom out a little bit and look at where we are, what the conditions are, and what the context is in the bigger picture. So overall, if I pull in this profile and include yesterday's action, overall what we're doing is we're moving back towards the point of control, which you see here at 80.50. And again, we have that cutoff at 88, 88.50, 88 quarter. That becomes the biggest area above, and look at where the overnight high is. It's 87 and a quarter, right up against that 88 cutoff area. So we have tested this. Remember what I said when we were up here? I said as long as 88 holds, then the market's likely to get stuck up into the 97.50 area. That was a big area, 97.50, and it's likely to chop around and advertise for buyers and then push to new highs if it holds. If it breaks through the 88, the expectation is it'll test the point of control or the high volume node below. It was a high volume node at the time. It was not a point of control. Chop around it, and then it's likely to test all the way through before it comes back to the point of control and then retests that 88 again. So this is this phase here. We're in the phase of testing all the way through. We did that already down to that 62 area. And now we're pulling back to the 80.50. So once it pulls back to the 80.50, the expectation is for chop, especially since it's Veterans Day. But ultimately, it's likely to test this 88, pull back, and then break through, pull back to the 88, back to the high volume node here, 97.50. That becomes the next target. Chop, 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 new all-time highs. Do you understand that sequence? This is basically what the auction is likely to do. So This morning, the expectation is very simple. Yesterday and the prior days are inside of each other, so we create a profile. Let's color that red just to make it stand out a little bit. Sound like that artist guy on TV. Just to see what the base is under us. The base under us is what is the point of control here at 2073, 75, 2074, right up against this 75 area that we fought yesterday. So the expectation for this morning is for a choppy open auction out of range. We're opening inside of areas that we've traded recently. The expectation, the higher expectation in these conditions is for it to have responsive selling back into that 78.75. So I expect it to chop around, responsive selling into 78.75, fight that, enter yesterday's range, and test down into the 75.74 area. And once it does, if it does, it's hard to tell from here, but if it does have any strength, then it's likely to push up. But if it takes out the overnight low, then it's likely to push through and get into 70.75 and base here for another day before we get into Thursday and all those Fed speakers. Did I lose you in that? There's a lot there to process, and I'm sorry about that, but that's just how the market works. A quick look at crude oil for those who asked. Recall what I posted an image a while back, last week maybe, and one of the things I was highlighting is that if it gets into the stem here of this trend day, this stuff here, then it's likely to push all the way through, and the target is 42.51. Look at what the market has done. It has pulled back, and it'll likely continue to push lower into 42.51, making this a weak low and taking out that low with a high probability. When I zoom out on this, we still have that lower low from August 21st, 24th to take out. We still have this big impulsive move that has not been completed yet. All of this is just consolidation, and the expectation is for this to drop. Technically, that's the expectation. Fundamentally, what does Saudi Arabia do? What does OPEC do? Who knows with those guys? But technically, if it was left to run under its own power, the auction is likely to take out that low it put in at 38.54, the low we've had for the year. I'll leave you with those thoughts. Again, if you have not looked at that convergence event recording, take the time to do so. It's going to scroll across Twitter several times. There will be several reminders over the next couple of days. Good luck to you today. Take it easy. It is a holiday, and just bide your time and pick your spots today. Good luck. Take care.